When Natarajan Chandrasekaran took over the reins of Tata Sons 4 years ago, the group was going through a difficult time. So how has Tata performed under Chandrasekaran? Especially when reports suggest that shareholders may vote on September 14 over giving him a second term. Let's analyze through some facts and numbers. So the first big challenge for Chandra, as he is usually referred to, was repairing the Tata Group's image, which was severely hit after the departure of Cyrus Mistry, following his well-publicized rift with group patriarch Ratan Tata. Ratan Tata's own stewardship of the group through the liberalization era had involved many ambitious bets, especially on overseas expansion. But many of those bets loaded group companies with debt and huge losses. So 4 years on, can Chandra look back on a beginning well made? In fact, in the past 4 years, the group's reliance on its only consistently profitable company, Tata Consultancy Services, has only increased. And the group is undergoing a transformation, carrying out a slew of acquisition with a focus on digital businesses. Also, the Tata Group is set to launch its Super App, which will bring all goods and service of the group under one umbrella. So everything looks good on paper, but there remains a concern, which is difficult to ignore. TCS continues to be the group's cash cow and is helping the group meet its financial goals. Now on the brighter side, the group showed the first signs of balance sheet deleveraging after a decade of debt expansion. The group's combined borrowings were down 4% year-on-year in financial year 21, the first such decline since financial year 10. As a result, the group company's combined gross debt declined to 3.35 trillion rupees at the end of financial year 21 from 3.49 trillion rupees a year ago. The group's retail ventures, Titan and Trent, were also impacted by COVID-19 last year. While Trent reported a net loss in financial year 21, its first in more than a decade, Titan reported a sharp 42% year-on-year decline in net profits. Tata Power, which is the third most indebted company in the group, reported double-digit rise in its net profit in financial year 21. But its earnings remained low compared to the debt and overall capital employed in its operations. The continued losses at Tata Motors remain the biggest headache for Tata Sons, as the auto major now accounts for more than a third of the group's assets and 40% of the combined borrowings of all listed group companies. Tata Motors recently indicated that JLR would make huge losses due to a chip shortage in the current year. The good news, however, is that the group's market capitalization has soared over the past year. So at this point in time, Natarajan Chandrasekaran's plate is full and a second term for him looks likely. But it will all depend on how much investors trust Mr. Chandrasekaran to make the right calls in view of the future of the broader economy.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.